Chuka Nwachukwu, the head of bonds trading at UBA, joins us now to discuss the likely impact of those bond auctions next week. Thank you so much, Chuka, for your time. So let's get right to it. What are your expectations for those auctions the auctions next week?
Okay, so like you rightly said, there will be two auctions. I mean, there are two maturity next week, 2026, and then the new 2042. Last auction, the 2026 came out at dropped from 11.65 the previous auction to 11.5, and that's about 50 basis points. And then the new one, 2042, came out at 13%. Now, this yield has been dropping ever since. We saw yield drop on the shorter end from 11.5 to about 11.1, 11.15 as at yesterday and as at this morning.
So this drop in yields, I want you to interrogate that a little bit for us, because all I've heard is that we're going to see higher yields this year. So do you still maintain that position? I think that has been the general view of the market.
Yeah, this drop in yield is a short-term leave because of the liquidity in the system. We expect that by end of March, early April, liquidity will thin out in the system, and then we see upward movement in yield.
All right, and let's talk about the naira. As you know, the central bank is pushing for this $200 billion target for repatriation of dollars. What do you make of that program? Obviously, there are many moving parts there, and many will say it's a great initiative, but in terms of movement in that direction and when we might see that impact, what are your expectations?
I think what the central bank is trying to do is to give banks and other FS users other opportunity, not just concentrating on getting effect from the central bank. So they're asking that, look, if you have customers who have FX requirement, you try to match it with those who bring in inflows. So the immediate impact will be rising rate, which is of course expected. But on a long term, I think that this policy has to go with the fiscal policy in order for us to actualize and see the benefits of it.
So just to clarify what you meant by rise in rate, are you suggesting some naira weakness as a result of this policy, or what did you mean by that?
That's a short-term measure, yeah. I mean, of course, you expect speculators to speculate, and you expect people to want to start holding dollar, and so that will bring in a lot of demand, and that will be bring in naira weakness on a short measure. Okay,
but very quickly, how prepared is the market for this? Because as you know, in terms of exports proceeds, if we can use that phrase, the oil companies really are those that supply the market. Do you see potentially significant growth in export proceeds from non-oil businesses?
Yeah, the CBN governor and then, of course, the government policy has been to grow the agricultural sector. And so most of if you heard some of the statement he made as regard this policy, he's talking about growing the non-oil sector. So we are looking at the agriculture, we are looking at the mining, we are looking at other sectors. So I believe that's what I said, that it has to go hand in hand with the fiscal policy. And so they need to grow that aspect, which is the agricultural sector. There are a lot of downside currently on the agricultural sector, which has to do with security issues and all that. So when government is able to sort that out, I believe that the policy will yield the expected result.